This is PayPal on the monthly chart, and as you can see, price has nearly done 100% retracement from the breakout back in April of 2017 near that $50 level. And how high did price go? It hit 310 before its ultimate collapse down to, again, near that $50 level where it broke out, which was the origin of the move to 300. Now, if you look at current price, you look down and to the left, you can see this rallying price basing candle rally out. That created a monthly buyer's level at $52, which held. And if you scroll down to the weekly chart, you can see price did pull back to a weekly buyer's level at $56. And then so far so good. That was good for a reaction. But price is not out of the woods yet. So before we continue with the analysis, let's look at this article that kind of talks about the 100% retracement. So PayPal stock closed at an all-time high of $308 in July of 2021. At the time, the digital payment provider dazzled the bulls with its robust growth rates and its plans to nearly double its number of active accounts from 377 million in 2020 to 750 million in 2025. It almost aimed to more than double its annual free cash flow and revenue to 10 billion and 50 billion respectively by 2025. Now, PayPal's stock price substantially plunged more than 80% as it abandoned those ambitious goals. In 2023, its active accounts actually declined 2%. Its annual free cash flow shrank 18%, and its revenue rose a mere 8%. And Dan Schulman, who was the CEO back then, was let go, or should I say nicely, stepped down as its sales growth cooled down. Now, that slowdown was caused by stiff competition, number one, macro headwinds for consumer spending, number two, and tough comparisons to the temporary surge in digital payments during the pandemic, and its decoupling from eBay, which replaced PayPal with its Dutch rival Adyen as its preferred payment platform in a 5-year transition from 2018 to 2023. Now, let's get into the bread and butter of PayPal's. PayPal charges a fee for every digital payment made through its platform. PayPal's annual transactions take rate had declined from 2.89% in 2015 to 1.76% in 2023 and has never expanded year over year. Meanwhile, let's talk about the competition. Fierce competition from other platforms like Adyen, Stripe, Block Square, and Cash App, Apple Pay, and Alphabet's Google Pay made it tough to raise its fees and counter those headwinds. Those shrinking take rates suggest that the digital payment market is getting too crowded, and big tech companies like Apple and Google, which can afford to operate their digital payment platforms as loss-leading extensions of their ecosystem, can disrupt those standalone services. The bears argue that PayPal can't keep pace with this seismic shift. Looking ahead, PayPal needs its growth in transactions per active account to offset its decline in take rates, as well as its ongoing loss of active accounts. To accomplish that, it needs to add new features to PayPal's core app to squeeze more revenue from existing users. Simply put, PayPal needs to spin a lot of plates to keep growing, but as long as it continues to lose active accounts and its take rates keep declining, it will likely stay in the penalty box and look like a value trap instead of a value stock. Now, I did say that this is where you would back up the dump truck. So far, so good, but I had no idea of some of the challenges that lie ahead, as I feel that PayPal rises with the price of Bitcoin was going to be a catalyst as a fintech company. But if we actually do go into recession, we're going to see transactions decline, and that's going to be another headwind for PayPal's price. Now, I did say that The stock is not out of the woods yet. I do have a target at $75. Let's look at things on the daily chart. So you can see that reaction. However, you're not getting that follow through. Nevertheless, you do have a gap. At some point that will get filled at $63. However, you got more headwinds in the form of dynamic resistance. This is the 200-day moving average. The red line is the 50-day moving average. And so, again, price is not out of the woods. However, we haven't seen buyer levels for quite some time until now. So I do think the bottoms are in. However, the climb higher is not going to be as easy as it was several years ago. Again, first level that we need to see price breach is going to be the $68 level. Why? Well, that was previous support, which is now resistance. And once you clear that, you're on your route to my first target at $74. The real test comes up above, near that $100 level. So we'll see what happens this year. I do think the worst is over, but expect price to have challenges moving higher. Thanks for watching. Subscribe. Please like the video.